So I would term this year as a year that it is a fantastic year for us to do research, because we want to do research in a very, I would say, turbulent market rather than in a bull market, so that the research is a little bit more conservative. These are some of the news that has happened at the start of this year. So basically, there has been news from US after the interest rates has increased. That has caused a couple of banks to collapse in the first quarter of this year. There are also news locally. So we have the very hefty ABSD that has been now doubled up to 60% for foreigners ABSD, as well as, of course, a lot of different kinds of cooling measures for the HDB market. And of course, this was what was being published over the last couple of months. Q3, later we'll talk a little bit about that. There was like a slight dip in the landed market. And of course, after we deep dive, we realized that it was being brought on by the detached homes in D10 and 11. And the puzzling thing every time with media, although we're in the media business as well, is that sometimes when we look at news reporting and media, there's always like a conflicting kind of like a situation, because when we see a lot of bad news, but then when we come back to Singapore, we'll ask ourselves, why is it that year on year, quarter on quarter, our price index are still increasing? So there are also, of course, a couple of positive news in the sense that why is it that sometimes, when Singapore were born and raised here, we're so fortunate, but at the same time, sometimes we can a little bit fearful of our own market. But foreigners and foreign investors, they are very optimistic about our market. Why is it that they want to bring their liquidity and capital into the Singapore market? So this was one of the latest report from UBS. Basically, it tracks household wealth, and Singapore stands out from a lot of global cities in the last 1 year. And in terms of our median household income, it has also been the champion in terms of global cities as well. So I'm going to help everybody to decipher all this information, because I think if you are intending to do some planning over the next 1 year, I hope this 6 to 7 insights will be very fruitful for you. So I'm going to talk about 3 main things: interest rates, market trending for 2024, my personal forecast, as well as how do you select properties. And why is it that I like to use this term called the ease of exit? Is because right now our names are very precious. Because of ABSD, unlike the past, we can buy multiple properties without much additional buyer stamp duty. Now, because of buyer stamp duty and additional buyer stamp duty, we have to be very careful to select the type of properties that allow us with an easier exit if we want to switch properties 3 to 5 years later. So you don't want to be stuck with a property that, when you want to put it in the resale market, after 12 months, there are no buyers or there are no offers. So we term this terminology as an ease of exit. A quick disclaimer, our sessions or masterclass that are meant for educational purpose. If you want to make any investment decision, do seek out with your own consultants as well.